chapter 3 is probably the hardest chapter in the book. And the stuff we're going to do in chapter 4, I think will help understanding in chapter 3. So even though it's not, I mean, it's not that the book is wrong. It's just that I think it'll be easier once we do chapter 3. Scratch that. Once we do chapter 4 to do chapter 3. So hopefully you guys got the handout. If you didn't, it should be the chapter 4 handout. Again, we're chapter 4 before we do chapter 3. And the handout, let me see here, make sure. Oops, wrong camera. It should look something like that. And so these are the journal entries that we just got through doing in chapter 2. And here's the thing. We just kind of reiterate the chapter. I don't know, my hands look huge, don't they? Because they're, but the chapter 1 stuff was the financial statements, income statements, state retained earnings, balance sheet. And chapter 2 was the journal entries, and they seem very different. They almost seem like two completely different things that aren't related, but they actually are. The journal entries are what you do daily as you go through and you put in all the transactions that happen. But eventually you got to make those into financial statements. And that's what we're going to do here. We're going to take the journal entries and make them into financial statements. So let me switch back to this camera. Oops, made it crooked. Ooh, let me drop that down a little bit. Okay, and then I'm going to pull up. I'm going to do something first. I think I figured out why I get those weird things and those weird shadows. I think it has to do with being on not the first handout, or not the first window I click. I think there's stuff from the other windows. But anyway, that's my problem. All right, so we have, so now these are both the same. If you want to do bring that up a little bit. You want to do a split screen? If you do a split screen, you can have both these up. So these are the journal entries. And they've already been made, so we don't have to make the journal entries. They've already been made for us. If you look on here, though, it'd be very difficult to know, say, how much cash you have. There's some cash in here, some cash here, cash here, cash here. It'd be very difficult to look at journal entries and know how much cash there is. Or anything else. How much do you have in accounts receivable or accounts payable or whatever. Looking at just the journal entries, you really can't do it. And again, it's because the journal entries are very quick. You take the 2 accounts you need, you write them down, and that's the whole transaction. All right. Now, this is a company that's starting out. They're a brand new company. Okay, so that's what this is about. This is the cash. So they don't have anything in the accounts. And what I'm going to do is go down to the second page here. And the second page has what we call a general ledger. And the general ledger is where we're going to find out what the balances are in the accounts. So how much cash do we have? How much equipment do we have? And some of these other accounts as we go on. But these are the general ledger. The general ledger is kind of funny. It comes about because it was a big thing that was always set on the ledge, and they always just called it the ledger. So this is where we're going to do what we call posting of the journal entries. So what we're going to do is take each of these journal entries and put them into our general ledger on page 2. And I might try, hold on a second, I might try making this a little bit bigger. Okay. All right, let me go back. Okay, so we're going to take this first account, first journal entry here. We have the journal entry is cash and common stock, and cash is a debit. So we're going to go on the debit side of cash here and put in, make it a color. 24,000. Okay, so I have put in this first, and by the way, this is called posting. Cut off. You're gonna do what they call posting from here to the general ledger. So I just took care of the cash. So now there's 24,000 in the cash account. It's on the debit side. And we also have to post the credits. So we have common stock, which is way down here. And it will also be 24,000. Hey, it's not red. Why isn't it red? So this is the posting of the first journal entry. This is what it would be on day one when they start the company. Put $24,000 in, and they have $24,000 of ownership. And nothing else has happened so far. But that's the first journal entry. It is posted. So this one's done. Now we're going to go to the next one. We have cash of a debit of 7,200. Okay. What happened here? Something's wrong with this thing. Well, that's unfortunate. You gotta be kidding me. Sorry, guys, you're not going to believe what it was. I accidentally turned off the numbers on my keyboard.
That's great.
Well, let's not dwell on whose fault that was. We'll just okay. So the cash 7,200 revenues is also a credit for 7,200. Both of those are in. So you kind of see what we're doing here. And eventually, you know, we're going to be able to figure out how much is in each of these accounts once we get done putting all these in. Okay. We have cash of 360 on the debit side. And we'll make that, what color? How about this rusty color? So cash is 360. Unearned revenue, the liability, is the credit for 360. All right, and utilities expense, 576, I'm sorry. Accounts payable, oops, 76. And I'll make those, how about kind of a turquoise, you know, Orange. Okay, so that'll be orange. Okay, so we're actually posting the accounts from the journal entries. And again, the journal entries, they're quick. That's why we did them that way. I mean, they're not, I mean, when you get used to using them, they're quick. It's hard at first, but. Okay, equipment has 30,000 in the debit. Okay. I'll leave that black. Cash has a credit of 75. So here they bought equipment. It looks like they put a down payment of 7,500 and then they owe the rest of it, right? And again, that's, you know, the beauty of this is you can actually figure that. Oops, I forgot something here. You can actually know what the transaction is by looking at the journal entry. Okay, so we have a $7,500 credit to cash, but we also have this accounts payable for 22,500. So that one has, you know, the three: equipment, cash, accounts payable. Accounts payable and cash. So accounts payable is the debit. 9,000. Oops. Let's find a color for that one. Green. And cash is 9,000. I checked it off earlier. I shouldn't have done that. So cash is $9,000 credit. So you can kind of see that one, they paid off liabilities. Their cash is going down with a credit. The accounts payable is also going down. So they, you know, whatever they owe over here, 23,000 something, they now owe 9,000 less. And we'll get a balance at the end. New accounts, yay! Depreciation expense and accumulated depreciation. Okay, so let's take depreciation expense is 3,000. And accumulated depreciation is a credit for 3,000. This is a brand new account that you've never, ever seen. Well, maybe you have, but so this is when the equipment is going down in value. You know, the cost of it is being the true terminology is cost being allocated. But think about it, equipment doesn't last forever, so we're going to depreciate it a certain amount every year, and so is the expense. This is kind of a weird account, though. These two accounts go together, and we'll see this later on. That we do the balance sheet. These two accounts go together, and I'll show you kind of how they do it. And you'll notice that one has a debit and the other one has a credit. So it's going to reduce the amount of equipment that we actually have. So these two accounts go together, and this one will actually reduce it. And we'll talk about that when we get to the balance sheet. Okay, so next one. supplies are 22,160. Let's give that a color. Oh, I didn't do depreciation expense color. Well, let's do the color for that one. This is the hardest part about accounting, is figuring out what color to use. Once you figure that out, it's not too bad. Oh, it's the same as the other one. Okay, so supplies is 2160. I'll make that purple. Didn't use purple yet. Okay, so supplies are 2160, and the cash is going to get a credit for 2160. Supplies expense is 1,620 debit. We'll reuse the red. And the supplies is 1,620. So what this is telling us is that they used 1,620 of the supplies. And when we get to the end here, we'll figure out how much is left in the supplies. Okay. Let's see. Wages expense. 1,440. And cash is credit. 1,440. Save mine so I don't lose it here. Okay. I'll leave those. Okay, so insurance expense, 864. Where are we at? Insurance expense, okay, cash, 864, also on the credit side. Cash, 2520. And let's make that a different color. Let's make that look at that dark green. Okay, so cash 2520. The other side is revenue. Prepaid rent. 1386. And cash 1386. Okay. Unearned revenue has a debit of 144. And revenue has a credit of 144. So let me explain what happened there. Okay, so what happened here is you'll notice that this unearned revenue, let's make that green. Okay, so this is a liability. So someone gave us money ahead of time, and it's a liability because until we do the work, we owe them the money. But apparently, we have earned 144 of the revenue. So now it's no longer a liability, and it becomes just a regular revenue. So it's unearned revenue. When we earn it, it just goes into regular revenue. And revenue is, by definition, it's earned, but you can also, say earned revenue. Oops. But anytime you see a regular revenue, it's earned. But so unearned revenue goes into regular revenue or earned revenue.
Professor?
Yeah.
So for the revenues, when they're credits, that means you don't have the money yet, right? So when the service is complete or whenever you do get the receivable revenues or whatever, they become debits. And
actually, no, the revenues, whenever you earn them, whenever you do anything to earn the money, you count it as a revenue, even if you haven't gotten paid yet.
Okay.
Now, if you haven't gotten paid yet, it will be in, I don't have it on here, do I? Accounts receivable.
Oh.
Yeah, I don't have accounts receivable. That's a stupid thing to leave off. But anyway, yeah. So if you're not paid cash, if you bill them, sorry about that. I think I was silent. Okay. If you don't have, yeah. So the revenues, whenever you do your work, and that is a distinction in the accounting that we're kind of going through, in that whenever you do your part of the job, so whatever it is, it could be mowing someone's lawn. If you mow the lawn, even if they haven't paid you yet, you count it as a revenue. Now, if they haven't paid you, put it in accounts receivable, which unfortunately I don't have up here to show you. But yeah, so whenever you earn it, it's considered revenue. Yeah. Regardless of whether you've been paid or not, count it as revenue.
Okay, thank you.
Yeah, and at that point, somebody owes you money. So, yeah. Okay. I guess one more. Okay, so rent expense is 693. Oops, not that. 693. I'll make that. How about green? And prepaid rent is 693. Green. Okay. So now these are all posted. And what we're going to do now is find the ending balances. And the hard one is going to be this. Let me do it underline here or not. Maybe somebody for me to do this. Only if I put spaces in here. It does, look at that. Okay, so what we're going to do is add up both sides. So we're going to add up all the debits and we're going to add up all the credits. So we'll do that first. Okay. $34.80. You guys have been in my class long enough, you know to check that number. The other side. 7,500. $22,350. And I'm gonna add those. I'm gonna try to make this add this up again just to make sure. If you mess up an account, or anytime I've messed up an account, it's been everything goes through cash eventually. So that's why cash has so much stuff in it. And if there's an error to be made, it's usually in that account. Oh, I can't do that. Turn off all the alarms. Okay. 900 plus. Right. Okay, so here's what we're going to do. So cash, we have two numbers here. And what we do is we subtract them and the biggest side wins. What I mean by that is we have more debits than credits. So we're going to subtract them, 34,800 minus the 2350. And that will give us the balance in this account. So we have 3480 minus 22,350. So 11,730. Is the ending balance in that account. So that's how much cash we have. Is 11,730. Now notice you cannot get that from the journal entries. You know, you look at this and how much cash do you have? You have no idea. Well, I mean, it would take you a while to figure it out. But in the the general ledger is, okay, how much cash do we have? And we will go through and post all the entries, and then it'll tell us how much there is. Now, some of these accounts are real easy to add up because they're just one number, and just one number you can, those are the last numbers. Supplies, you have to. Okay, so supplies account, we had 2160 on the debit side and 1620 on the credit, so we're going to subtract them. And the biggest side always wins. In other words, whichever side has the highest number is going to get with whatever's left over. So 2160 minus 1620, 540. Oops. Okay, down here we have to subtract those. And I think, unfortunately, I made those the same. So 1386 minus 693 equals 693. Okay, probably shouldn't have done that. So apparently this is for 2 months worth of rent, probably. Okay, and these are just all single ones. Okay, revenues. And you'll notice they just kept going up. So the revenues are 7,200 plus. And again, this revenues and expenses will always be going up unless there's something crazy happens. 9864. Okay, that's right. Over here. Okay. Okay. All right. So we have 9,000 on this side. 9,000 debit. Over here we have 23,076. Oops. And we're going to subtract those two. And the biggest side always wins. $14,076. Oops. $360 minus $144. $216. So they still owe 216 of services. Retained earnings, we don't have anything in, and you think about it, this is the first year. So there was no earnings to retain. There's no income to retain from previous years. So this is just the first year. You know, the first year of it, so that there is nothing retained in there yet. No dividends were paid. Any question on this? Okay. I am going to print this so that I can set it over here, because when we go to the next step, we're going to need this information to go on to the next step, is the trial balance. So, print page 2. Okay, oopsie daisy, I gotta do something here. It's unreadable. I gotta take out all these fancy things here. Oops. Okay. Let me try this again. Okay. And I'll highlight them just in yellow. So okay. All right, so we're gonna go to trial balance. Now the trial balance is there for a couple of reasons. It's actually what you usually work with when you're going through the accounts, but also it makes sure that your debits equal your credits. And if they don't, you got to go back and fix it, because if it don't equal the credits, your financial statements won't balance down here. So these have to balance, or else it won't balance down below. Okay, so we're going to take the cash account has a debit of 11,000. $730. And so I'm going to put a check mark once it's done. Okay, so that is cash supplies are next, and that's going to be 540. Bottom here we have prepaid rent is 93. Oops. Equipment, 30,000. Accumulated depreciation, this is on the equipment. Oh, here it is. 3,000. Now, I think I talked about this earlier, but a little bit bigger. One more bigger. I can, yeah. Okay, so this is these two are going to go together. And you'll notice that one is the debit, one's a credit. So in other words, this equipment really isn't worth 30,000. It's 30,000 minus 3,000, whatever that comes out to. Okay, accounts payable. And 14,076. Unearned revenue and 216. Common stock has 24,000. Retained earnings is 0. We weren't here around the previous year, so there's nothing to retain. Okay, revenue. $98.64. And all the expenses. So this is utility, depreciation expense 3,000. Expense 1,000. 620. Wages expense is 1,440. Those don't line up. Oh, they have space between. Rent expense is 693. Insurance expense is 864. Okay, now for the difficult part. Well, let me go over one thing just to kind of highlight this. You'll notice that the first stuff up on here, this is all balance sheet stuff. No, this is all on the balance sheet. Which is a better way to show this. So that's all balance sheet stuff. Assets, liabilities, equity. Down here, this is all income statement stuff. This is usually the kind of the format you'll see for these, for the trial balances. They'll have the balance sheet stuff first, and then the income statement stuff second. And just to let you kind of a peek into the future, at the end of the year, these all get zeroed out. And then you start a new year with new revenues and new expenses and all that. So the income statement is for a year usually, and you start a new year, you set everything back to zero and start over. So anyway, this is this kind of the way it's set up though. All right, adding these up. It can't be right. Well, let me do the other side, and then we'll figure it out. I'll figure out where I went wrong. Okay, so 3,000. Okay. So you can see what I did wrong here. If I take these two, okay, I added them up, they don't come the same. So I know this isn't right. But if you look at what they're off by, it's off by 693. So I probably didn't enter one of these 693s into it. So I'm going to add this side back up. and see if it comes out to that. But you can sometimes tell which ones you missed by subtracting them. So I made an error here of 693. So I'm assuming it's one of these two accounts. But I'm going to go ahead and add those up again. Yay, okay. So 51, 156. Okay. Okay, coming over here, the income statement, statement of retained earnings, and balance sheet. Now, you can actually, there's no accounts in here, but you can actually cut and paste these. So what do we start out our income statement with? Which account? Oh, I know I can do this. Aha. So which account do we start out our income statement with? Oh, and you guys can do this too. If you minimize it, if you make it smaller, I'm not sure what the pluses and minuses are on here, but if you roll, I got a scroller mouse, but if you, I'm sure the way to sort of reduce it. But anyway, you can show two at the same time. So what do we start out our income statement with? Which account?
Cash.
Nope. The balance sheet we start out with cash, but the income statement, what do we start out with? Did someone already say it? I think I was talking over someone.
Would it be the revenue?
Yep. So revenues. I'm just gonna copy that. Yeah, control. Yeah, by not copy. Sure. So revenue, and you can just cut and paste this if you want. Expenses. Next. Stop that. Now I'm going to jump in here and put negative. You do not have to do this, but I'm going to put negatives in front of these so I know it's the money going out. And this will leave us with our net income. Let me make sure I have all of them. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Okay. Okay, so our net income will be the revenue minus all those. think it's 1671. I'm going to do that one again. Did you guys get that also? 1671. 98. Doing it again because if this doesn't, if he has wrong income, nothing else is going to be right. Yep. Okay. So this is their net income. Okay, statement of retained earnings. What do we start out with?
The net income.
We're going to start with retained earnings, but the first thing would be in there. Now, there's 0 in our retained earnings. So our beginning retained earnings. Is 0. And yes, income will be the first dollar thing we put in there. We don't have any dividends. There's no dividends over here. Oops. Okay, so this will be net income is that. Dividend, I'll put it for this fund. And let's go with our ending. I'll put it here. Our ending retained earnings. I can do the math on this one. So our ending retained earnings is that. So in this case, it's the same with their net income. Why they didn't have anything to begin with. It's the first year. And they also didn't take out any dividends. So the piggy bank just has the entire income sitting there. Okay, assets. What do we have for assets? It's probably going to be the first asset.
Cash.
Yep. Yeah, so your cash. So these are all going to be your assets. And these are the amounts and the assets. Now, this accumulated depreciation. This is a tricky one. It's going to be negative 3,000. You'll notice all the assets have debits. The accumulated depreciation has a credit. This is what they call a contra account. And this would be a contra asset, but it's a contra account. And then it goes against some other account. In this case, it goes against equipment. we go into chapter 3, I'll go into why we have this accumulated depreciation account. You know, you may reasonably say, well, why don't we just subtract it out of the equipment? Why don't, you know, instead of crediting this account, why don't we just credit equipment and have the equipment be 27,000 whatever? There's a reason why we do it that way. So, and you have to hold your curiosity until we do the next one. So it's a contra account. It goes, in this case, it goes against the equipment. Okay, so add those up. Well, except for the 3,000, subtract that. Okay. I guess it's easier. $39,963. Okay, what liabilities do we have?
Accounts payable.
Yep. So accounts payable and the unearned revenue. So total liabilities will be those two together, whatever that is. $14,292. The equity, we have what?
Common stock.
Yeah. Common stock, you know, do you have to put retained earnings in there? No, not really. You could. There's nothing in it. I'm going to put it in just because I'm bored. So our total equity would be 24,000. Oops. I did it wrong. Okay, who can figure out what I did wrong? I did something terribly wrong. Terribly, embarrassingly wrong. Like first day of accounting, wrong. What did I do wrong on the balance sheet?
For retained earnings, is it supposed to be 1,671?
Yep. Yep, it is. Very stupid mistake. Okay, so this should be that. And of course, that has to make this difference. Be 25,671. I don't know. That looks terrible. Okay. Yeah, so we change it. Okay, so these two together, let's try that again. 14, 2 plus 5, 6, 7, 39, 693. Haha. Okay, so just kind of reiterate what we've done is going from this, which is just the journal entries, quick, jot down and general ledger. This is actually where most of your time is spent. General ledger, general ledger. Trial balance, make sure it balances. If this doesn't balance, if that doesn't balance, then these won't balance. Any questions on that? Okay. Let's see here. I'm going to stop sharing because I'm greedy. I don't like sharing. Okay, so that is kind of the accounting cycle. And that's taken from the journal entries and quick, right? Take down the 2, maybe 3 accounts you need. Write them down quickly, much more quick than writing out a paragraph as far as what the transaction was. Posting to the ledger, which is the big thing that you can actually get the balances for. This, the journal entries themselves are not very good for finding the balances. So the general ledger is there to get the balances. Trial balances are kind of there to make sure that you don't miss anything. So if you miss an account, either posting it from here to the general ledger or miss an account on the general ledger, putting it in the trial balance, that's when you find out about it. And again, if you look at the differences between the numbers, like you saw the difference that I had was 693 when I made the mistake. So a lot of times the difference between the numbers will tell you kind of where to look, which account you probably missed or that sort of thing. So anyway, in the trial balance, and then from the trial balance, you can make the financial statements. Any question on that?
No, I think it went well. Thank you.
Oh, good. Okay. There is a problem too, and I'll make that due a week from today. So you can do that on your own. I don't want to take another class time to do it. You guys probably get the idea, I'm sure. So problem 2 will be posting the assignments. So I'll put problem 1, problem 2 in the assignments, and problem 2 will be due. Well, I'm gonna make both these due a week from today. That'll make it easy. Any questions on that?
No, I think it was good.
Yeah, I think we're good.
Okay, good. All right. Well, I will talk to you guys on Thursday.
All right, Professor.
All right.
Also, Professor Stanley sent you an email over the weekend.
what did it have in it? What was in the email? Let's see.
Some pictures of the work I said I need to email you.
Oh, okay. I'll take a look at it. Yeah.
Thank you.
No problem.
Have a good day.
I will. You too.
Thank
Thank
you.
you,
Have a good
Professor. Have a
one.
good one.
Thanks. See you guys.
Take care.
Thank you.